What's going on, YouTube? I'm back again, and this will be my last video. Well, this might be my last video talking about purchasing stocks. Well, no, I will make more videos, but at the end of the day, this is going to be my last one I'm reviewing to add to my dividend portfolio. So, I maybe in the future I'll add more if people ask for it, but after this will be the last one. And sad to say, after this, I will see if I'm gonna be adding or subtracting from it. So I'll give you an update on my portfolio, but it looks like I'm finally done building my dividend portfolio for my bridge account. It roughly has 23 stocks in there. And just so that you understand, I will be purchasing this stock today. And if you want to get to the point, hey, thanks for watching this series. And let's get into this video. Now, this is the reason why I'm buying this stock today. And it's because I'm building a bridge account. If you don't know what a bridge account is, this is what it is. Now, back again, I am doing this so I can have a passive income. And I only believe that passive income is something like one of these two things, just like what this dude said.
Of income exists. I think the reason so many scum buckets are making so much money is because you're buying stupid courses over and over, thinking there's some magic formula for passive income. Passive income looks like this. You take money that you can afford to go to zero, and you put them in the two places that have historically created passive income. Public markets, that you don't care if it goes up and down and you just wait to the end, or real estate, and you hope that your real estate area doesn't get crushed. Everything else almost doesn't exist.
That we know what passive income is, let's talk about how I'm going to invest. After I read the book Intelligent Investor and listened to Warren Buffett, it changed the way I invest. And I mainly invest by looking at a few things. And this is how Warren Buffett thinks about investing.
First 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19 or 20. And I realized that I was doing it exactly the wrong way. But it didn't hurt that I had that background and everything. I rejiggered my mind and when I read the book, The Intelligent Investor. And from that point, I never bought another stock. I bought businesses that happened to be publicly traded. But I became an owner of a business. And I did not care whether a stock went up or down the next day or the next week or the next month or the next year. And I didn't have any idea what it would do. I didn't know what the stock market would do, but I knew businesses.
What's my requirement? Because dividend income, and the reason why I'm buying stocks that pays a dividend is because this is what someone said, and it just clicked with me.
Never buy a stock that doesn't pay a dividend. That has been your advice through and through. Why are these stocks more attractive?
You look at companies that don't pay distributions, don't return capital, how risky they are. Take a GoPro, for example. I'm not just picking one company. I'm just giving you a good example of a company that basically has lost 70% of its value, never returned a dime to shareholders. Or how about a company that's been around much longer, Yahoo? Never paid a dividend. It's never made money for anybody except all the CEOs that have gone through there and got whacked.
That we got through all those. My requirement is, number one, it has to pay a dividend. That's what the whole point about adding to my dividend portfolio. Number two, it has to have decent performance that I can grow. I don't need this right away. I'm building this up. I might need it in 10 years. I might need it in 20 years. I might need it in 30 years. I haven't decided yet, but I want to build this bridge account so that I could have it for the future, just in case. You never know what happens. Number three is they have to be financially stable and something I want to purchase. And number four is I want ownership part of the company. So those are my only 4 requirements. Now, what stock am I going to be getting into? Property Group. So Simion Property Group is a REIT. And yes, I'm buying a REIT to add to my portfolio because I need to diversify. And this is the one of the better ones I've found. If you don't know who Simon is, here's a video.
This is Simon. More than retail real estate, we are a company of experiences, destinations, and gathering places where communities come together to discover the latest in shopping, dining, and entertainment. Simon is home to hundreds of iconic properties in top-tier markets across the country and around the world. With more than 200 U.S. properties, including malls, mills, and premium outlets, and 3,000 brands with annual sales of $62 billion, Simon is the #1 publicly traded retail real estate company in the world.
This is what Simon Property is. And I'm going to the Wikipedia so that we could have a summary of it. It's easier. It's American Real Estate Investment Trust. Invest in shopping malls, outlet center, and community and lifestyle center. It's the largest owner of shopping malls in the United States, headquartered in Indianapolis. So they own about 232 properties. So I believe that they're doing just fine. Now, their revenue has went up. The operational income went up. The total income went up. Now, what went down is the total asset and total equity. But that's fine with me. So, it's just a REIT. If you don't know what a REIT is, I'll put a video so you can understand it.
Here's how a REIT works. If you don't have a lot of money to invest in real estate, you can pool your money with other investors and simply give it to the REIT. The REIT is an organization that buys real estate with high rental income, such as malls, hotels, and offices. All of these properties produce income and are hopefully profitable, and that's what you have here. REITs are required to pass back 90% of the profits back to investors as dividends, and then the cycle continues.
So now that you know what REIT is and what Simon Property Group is, here is how they've been doing. Over the last year to date, they're up 0.84%. 1 year, they're up 0.98%. 3 years, they're up 59.38%. And 5 years, they're up 176%. And this is decent growth for me. It's good enough. I know that the real estate market is hurting right now, but even being able to stay in the positive makes me think this stock is going to do well. Now, the dividend is 4.87%, which is high for dividend yield, but hey, at least it pays dividend, and let's see how it's been performing. So Simon Property Group dividend summary pays a 4.96%, $8.60 a year, and a dividend increase for 4 years with the dividend payout of 132.92%. So they've been doing pretty good. They've been paying pretty often. So I understand that this will be a decent company. It doesn't look like they've been out on the market long enough, but I believe in this company because after I looked at the finance, right? You have to see how they're doing financially. Well, their revenue grow. Did it grow revenue? Now, from 2021, 2022 to 2024, it grew revenue. Not a lot, 11%, 3%, 7%, and about 5%. That's not bad. They're not growing that fast, but they're growing steadily. At least they're not dying out. And I have to see the profit margins. This is very important to me because how much profit are they keeping compared to spending? And they have a whopping 82.50, a gross margin. That's really high. With a net profit of 45%. Outrageous number for a net profit. I like that number. That means they're pocketing a lot of money. So the balance sheet, intangible is worth 22.84% or billion, and long-term debt, it has a 24.26 billion. So long-term debt, it's a REIT, so it weighs different, but I like to look at the cash flow. How much cash flow do they have left over, and has it been increasing or decreasing? For a REIT, I kind of want to watch it stable, especially with these big of a profit margins. And it had at the end of it $3 billion cash flow at the end of 2024. And capital expenditure, if you don't know what that is, investor wants to see capital expenditure has covered by operation cash flow is negative 755 million. So to me, it looks pretty good. Now let's look at the AI. What does AI say for? Remember, I'm mainly shooting for the growth and dividend. So the valuation is 3 out of 6. It's not really comparing with anyone on here. So AI hasn't really didn't do that good of a job on that part. But earnings, it's 4 out of 6. Compared to this other management companies, they're negative. Simon's a negative 10. And BXR Inc. is the only one in the positive. So I think 4 out of 6 for the earning is kind of under. But hey, I think they're 5 out of 6 personally. Future growth is a 5 out of 6. I agree with it. Now, the historical performance is a 3 out of 6. And I agree with it. It's not the best REIT that's growing, but it's not bad. And financial health, I'm be honest, the debt's probably going up with it. It's a bad time to buy REIT right now. But at the end of the day, I need to diversify. And I like the profit margin on this one. And that's the main reason why. Let's see what investors are in here too while we're at it. Bot. A bunch of people bought and they didn't sell. So, you already told at the beginning of the video, I am buying this company. So, thanks for watching this series. Now, if you want me to review other stocks and other things and give my personal opinion, I can continue doing it. But I have no point of doing it unless I want to add it to my portfolio. I'm not going to waste time on keep reviewing other stocks. I will go into making videos about the portfolio and how well or how bad it's doing and what I'm adding to it. But besides that, it's time to see my portfolio and stay tuned to see one of those videos. It probably be a little bit. I have to figure out how to put it on the camera and put it on the screen so that I don't get robbed of information. So it's gonna take me a little bit to figure that out. But I may keep doing investment videos, but at the end of the day, if I don't have a reason to purchase these stocks or look at them, why waste the time? Now, I might need to add another 4 or 5, but I want to focus on building this portfolio. And unless y'all want me to look at a certain stock, which you comment down below, direct message me, I'll give you my opinion on it. But besides that, not really interested in doing it because I already finished building my portfolio. Like and subscribe to my video, and that's all I got for you.